I wanted to kick off with you on the recent earnings.
Yes.
In particular, your department, investment banking, where revenues were down 27% year over year. Some of your rivals, though, seeing increases year over year. What was that all down to?
Yeah, so we saw the 5 major U.S. banks report this week, and our investment banking results were a little bit softer quarter over quarter, year over year than our competitors. It's part in due to a phenomenal outperformance in the third quarter of last year. And so we step back and look at the absolute results. We put up advisory revenues of $716 million, which was about 40% higher than our next competitor. And to us, that's the key barometer of our CEOs hiring us on their most important thing, the most important business that they can do. Our underwriting business was a little bit softer. And then if you step back and look year-to-date overall investment banking results, we're neck and neck with JP Morgan. We're about 30% ahead of the next competitor. So we feel quite strong about our franchise, and we feel quite strong about our outlook.
The results, though, regardless of those comparisons, were behind what most analysts had forecast. So what about the fourth quarter? Is it just simply because some deals, advisory revenues have been pushed into Q4? Will it see an immediate quarter-over-quarter bounce back? As
you know, the business is driven a little bit by clients, and it's a little bit lumpy. So some of this is a result of timing. Our pipeline is strong, and our backlog is up. So we feel relatively strong about the fourth quarter and continue strong about our position.
In terms of corporate confidence overall, has that been hit of late, whether by the trade war or other factors?
Yeah, corporate confidence is weaker. It's a fascinating dichotomy in the markets right now. You've got equity markets that are at or near all-time highs, but underneath the surface, you've got a rotation away from growth into value, and you've got a lot of sectors and companies that have underperformed. In the debt markets, you've got capital markets that are free-flowing and record low interest rates, but people are anxious about a credit cycle. In the M&A market, you've got $3 trillion of volume year to date, but underneath the surface, the number of deals are actually down 15%. So there's a lot of mixed signals and mixed data. Companies and boards are anxious about trade war, about Brexit, about the election cycle. And so there's lots of reasons to be cautious. And then when you talk to any individual CEO, he or she will tell you they feel good about their business, and a lot of them are prone to action. So it's quite a set of mixed messages in the market, but people are generally forward-leaning, but corporate confidence is down from where it was a year ago.
But as we all know, confidence can be one of the first things to turn before the actual data does. Are you suggesting that it's down enough that we could be looking towards recession or that sort of thing for next year?
Yeah, I don't think I'd call it a recession, but I think confidence has been softer than it was. And if you see good news on Brexit or resolution of the trade war, the confidence can turn quite fast.